Good afternoon, everyone. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS and our affiliates COVID-19 Survival Panel. This is session number 17, so all those Fridays have come and gone pretty quickly, haven't they? Today we're going to be looking at early stage innovation company capital raising and crowdsource funding opportunities for SMEs and accountants. I'm pleased to welcome our keynote presenter, Anna Gunther, a director of Pledge Me. Anna's talking to us all the way from Marlborough in New Zealand. How are you today, Anna?
I'm really good, thank you. How are you, Peter?
Very good, thanks. And thank you for joining us from New Zealand. And we look forward to hearing from you in about a minute's time. And I'll be talking also today on early stage innovation company opportunities. I'd also like to welcome the people who are watching us on live feed from Facebook. We're getting more and more each week that tune in Friday at 12 noon AEST to watch these video presentations. For those who are on the live webinar, if you have any questions, please go to chat and type them in. Unfortunately, you can't do that if you're on the live feed on Facebook. So if you have questions, can you please send me an email, peter@essbiztools.com.au, and I will ask Anna the questions, or if you send them in later on, we will send them to Anna and get the answers for you. And we will post the questions and the answers on Facebook and also on our webpage, www.essbiztools.com.au. So it's my pleasure now to introduce you to Anna Gunther. Anna's a director of Pledge Me, which is a crowdsource funding intermediary that operates in Brisbane and also in New Zealand. So how are you today, Anna?
I'm really good. Yeah, no, really enjoying. Yeah, winter feels like it's going very quickly this year, isn't it?
Yes, that's right. That's right. So you're right now, we're on live feed. So
yeah, so you would like me to share?
Yes,
I will
thanks.
get
Yeah.
going. So present. So my name, as introduced, is Anna Gunther. I'm the co-founder and chief bubble blower of Pledge Me, which is a crowdfunding platform here in New Zealand, but also over in Australia. All right, my slides started at the end, so I'm just going to quickly scroll back. But yeah, so to start off with, what is crowdfunding? I'm assuming people watching right now have heard of it before, but it really is as simple as it sounds. You go out to your crowd for funding. You set a goal of how much money you want to raise, the deadline in which you want to raise it by, and you offer something in return. So there's a few different types of crowdfunding. There's project-based crowdfunding where you offer a reward, equity-based crowdfunding where you offer shares in the company, and lending-based crowdfunding where you can actually borrow money from your crowd and repay it at an interest rate that you set. We've been doing crowdfunding since 2012 here in Aotearoa, New Zealand, with first licensed platform in 2014. And we moved over to Australia in 2017 when the legislation changed to allow equity crowdfunding. We've had over 1,500 successful campaigns so far and just under $50 million pledged through the platform. But crowdfunding is a really young industry, not just in terms of how long it's been around. The first platform started launching 2006, 2007. But also in terms of the people that are using it. We often see that it's young entrepreneurs coming through launching campaigns, but also young people investing as well. I think 80% of our users are under the age of 35. One example of one of our young entrepreneurs was a woman named Dee. You can see her on the slide. She started a milk and cookie cafe. And she decided when her landlord tripled her rent that she was going to raise funds from her crowd to buy a bus and start taking her cookies around the country. And she managed to raise over $80,000 from her crowd by offering them rewards. So this was rewards-based crowdfunding. She offered them cookies. She offered them a cookie-based beer that she collaborated with a local brewer on. And she even offered people dates with her around her campaign. But the cool thing is that crowdfunding is growing, not just in terms of how many platforms that there are, but also the speed and the size of the campaigns that are coming through. The second successful equity campaign through our platform was for a local brewery or local brewer called Yeasty Boys. And they actually managed to raise their goal of $500,000 in half an hour from going live. And they did that not by having the swishest offer document or by being, having lots of bricks and mortar. They actually did it because they had a crowd that loved what they did. Everyone from their next door neighbors invested through to their distributors in Hong Kong. But the thing that I love is the fact that it's growing not just for some of the traditional industries that you might expect, but also for people that might not normally get access to finance or might not normally have companies that would be seen as investable. One example of this is a group just outside of Gisborne in New Zealand who wanted to raise money for their medical cannabis company. And they went out to their community and said that they wanted to provide jobs and opportunities for the young people in a place that had the highest rate of unemployment and the highest rate of youth suicide. And they managed to raise their goal of $2 million in 10 minutes from going to the public. It actually took our platform down twice. There was so much interest in it. And internationally, we see that equity crowdfunding and crowdfunding more generally is growing. They said that $34 billion was pledged to crowdfunding campaigns in 2017, and they're estimating that by 2025, that'll be $300 billion. And yeah, I love the fact that it's diversifying who's investing. So as I said, 80% of our users are under the age of 35, but also the types of companies. So in traditional venture capital world, only 2% of funds goes to companies with female founders. What we're seeing through crowdfunding is, at least on PledgeMe, over 50% of our companies have female founders. And one example of this is Megan May, who started an organic unbakery. And she went out to raise money from her crowd and managed to raise her goal of $2 million in 8 days, or 8 years if you look at how long she'd been in business. But it's not just young people that are raising money through crowdfunding. One of our oldest group of campaigners were actually a bunch of ex-Fisher and Paykel engineers. They'd built the dish drawer and then decided to build wind turbines together. And they managed to build these single-bladed wind turbines and put them around the hills in their town. And when they went out to raise money, they had the people that had been watching them put these turbines out invest in their company. And they raised $500,000 from their local community. So there's 3 things that we say are really important if you're going to go out and crowdfund. The first is that you have good, you clearly articulate how the money you're raising is going to help you achieve your goals and grow your company. So for example, one company that we had come to us was a local brewery who wanted to raise money to expand. And they knew that if they moved into a new brewery, they'd be able to triple production effectively immediately, and that they had demand for that locally and internationally. And so when they went out to their crowd, they could explain that to them and show them where they wanted to grow without promising anything. And they raised their goal of $2 million in 2 days. But you also need a good crowd. So you need to know that there are people that love what you do. And you need to be able to figure out how to get them excited about what you're doing in different ways. So one example of this is a woman named Brianne West, who started a solid shampoo bar business. And when she launched her campaign, she actually launched it with an event where she was at a hairdresser's so people could try her solid shampoo bars in real life and then go and pledge to the campaign if they wanted to. The interesting thing with her campaign is she had, I think, 80% of her investors were current customers, and 3 of them were chemists. And so when she was having trouble figuring out how to double the batching when she moved into a new factory, one of her shareholders came in and solved that problem for her in like 10 minutes. And the final thing to think about is having good comms. So you can have a great campaign and a great crowd, but if people don't know what you're doing, they won't pledge to the campaign. So it's really figuring out how to use your existing sort of social media and communication platforms, as well as how do you activate traditional media around what you're doing. So if you're thinking about running a campaign, or if you're thinking about supporting someone who is running a campaign, which I think is more important for this crowd, yeah, you do need to be really clear on what the funding is for. This is Mungali Creek Dairy, a dairy company in the Atherton Tablelands, who knew that they needed to finish kitting out their new factory that they just built. So they went out to their crowd to support them with that. And they were very clear that if they could do that, they'd not only continue to process their milk, but at a larger scale, they'd also start making things like ice cream and new yogurts that their crowd could give them feedback on. You also need to think about your setup. So in Australia, you can be a proprietary company or public unlisted company if you want to go out and raise money, but it's just thinking about making sure that you are set up as a company. Often we'll get not-for-profits thinking that they could potentially raise in this way. You need to think about the rules around crowdfunding. So you're allowed to raise up to $5 million in Australia, but there's a cap on how much an individual can invest of $10,000 unless they're a sophisticated investor. It does lower the compliance costs to go to the public, but you need to make sure that you're not being false or misleading in anything that you say. And you have to go through a licensed platform. You can't just launch an equity crowdfunding campaign on your Facebook page. When you're thinking about who's in your crowd, like think about everyone in your crowd. So your crowd will probably start with your family. In this case, this is my grandparents. My granddad still isn't sure exactly what crowdfunding is. I got him close one time with a sausage sizzle online, but he doesn't know what online is, so that's not working so well. But your community is also your crowd, so the people in your local area might want to invest in you, which was the example with the medical cannabis company I told you about earlier, but also for Mungali Creek Dairy. When they went out to their crowd, they had the founder, who was in his 60s, old school teacher, invest in his campaign, as well as a lot of the local community who just loved the products they were creating. And don't forget your customers. If they like you enough to buy your product, like was the case with Brianne West, they might like you enough to invest in your company. And you can always go a bit further by posting things on social media and getting traditional media as well. With social media, you do need to be careful in Australia because you have to make sure to reference the risk warning statement in the offer document for any public posts that you make. But you can go out and just check with people. And what we recommend is getting them to register their interest, to say if they want to invest in your company before you decide. And so we've seen people do great examples of this in the past. For example, Yeasty Boys, the craft beer company that raised $500,000 in half an hour. They actually had people register their interest, not just with their name and their email address, but also things that they could offer in return, like asking them like what kind of shareholder benefits would they want. And they got amazing things, like people wanting their name on the beer, they wanted a discount for life or the life of their shareholding, but they also got things like people wanting the founder's pants because he wears brightly colored pants, or to learn how to homebrew with the founder. And they actually took that feedback on board. And I think Stu did send someone his pants, the person who requested it. But they also said that anyone who pledged over $2,000 would be able to homebrew with the founders at every AGM. When you're going out, though, you need to make sure that whatever you say is balanced. This is really important, especially to ASIC. They want to know that you're not just talking about the potential opportunities and markets that you could explore, but also the risks that you see in your business. So people can see that you understand not the good bits, but the hard bits as well. With not being false and misleading, you really need to be clear on facts versus opinions. I think this can be hard sometimes for entrepreneurs where we're told to sell big, but your job as a advisor is to try to manage that and make sure that if it's a fact, they know where that came from, and if it's an opinion, it's positioned as such. Another thing is just not making any promises, especially around returns, and just talking about like where the company might aim to be going without promising it. And I know that you probably already know this in Australia, but you're also not allowed to provide forecasts or projections unless you have clear and reasonable grounds for doing so. So we talk a lot about being balanced, but and being clear with your information, but you also have to have fun. I think that this type of capital raising is quite different from other forms. And one example of someone having a lot of fun was Yeasty Boys again. They went out and instead of providing a traditional pitch video of them talking to camera, they had a video of the Queen chugging their beer in a G-string, which resonated with some people and offended others. But they were really clear when I told the founder that I'd showed his pitch video at an event I was talking at, and someone was quite offended. He was clear that was their filter. They only wanted people investing in their company that got them. And so that was one of their ways of checking. And when you're getting ready to go live, it's really important to set a date so people know what you're aiming towards so they can be ready and prepared to pledge when you go live. And part of that is making sure you provide information to them in the lead up to your launch so they can make the decision around whether they would invest or not. And so do that typically through newsletters to the group that have registered their interest saying that they would like to invest. We also really recommend having a launch event because it's a chance to bring people together, either in real life or online. And you can use that as an opportunity to show people your company in different ways. One example of this is a group that was creating a technology that sensed your brainwaves and was able to turn it into communication, specifically for people that were locked in and unable to verbally speak. But also they used it at their launch party so people could use their brain sensing technology to order beer or cookies real time. And the cool thing is you'll get traditional media often, especially if there's something intriguing about your business, they'll want to cover that story of you and what you're doing. One example of this was, again, ThoughtWired, the sensing technology, had one of their advisors go on TV and tell people why it was so important what they were doing, because she personally was locked in. And currently the only way she could communicate was through a head wand to tap out the letters and the words that she wanted to say. And so she told people how important their product was and why she personally supported it. But we also see that you get trolls. It's the nature of doing anything online, is you might have people that disagree with you or might want to ask you really hard questions. And so what we always recommend with that is use that opportunity to respond really well. We've had people invest purely based on how companies responded to people asking hard questions and responding well to it. So you need to make it real, though. As I said, it's not you filling out a grant application form. It's people investing in the founders as well as the companies. So you need to show the people behind it. And you can do that in different and authentic ways. One beautiful post we saw was when Dee from the Milk and Cookie Cafe hit her goal. She posted a picture of her crying in front of her cats. And I don't know if it was her being real on the internet or cats on the internet, but she got $10,000 more than she needed for her project-based campaign. So make it immediate, make it something that people can do and get on board with real time. But know that it's not a silver bullet, that, you know, it is a lot of work to prepare a capital raise, but we really believe that it can bring more than just funding. One thing to be aware of, though, is that often we see in a crowdfunding campaign, you get your most pledges in the first few days when people are excited, and then the last few days, and sometimes you can get up to 70% of your goal in the final few days. It's something we call deadline magic. So it's something to think about as an advisor as well, is that people have to see the full campaign through. They're not going to just get funded potentially in the first few days. So for campaigns that didn't work, often what we get told is it's things like rushing into it or expecting a crowd to be there. And sometimes it comes down to actually the business model being seen as too complicated or incorrect information in the IM. So as advisors as well, this is something for you to think about, is how do you support your companies to really make sure the information they're providing is correct and thorough without being seen as risky or too complicated. But yeah, we truly do believe that crowdfunding brings more than just funding. It brings a crowd in around you to support your company as you grow, and often brings them in as brand ambassadors who are out there selling what you do because they own a piece of you. Awesome. And that is me.
Okay, thank you very much. I just got a couple of questions that I might pose to you. Thanks, Anna. An accountant that has a client that's just walked into them and said, "I've heard about crowdsourced funding." How do you think they should react to that sort of question?
Yeah, I think it would be up to the advisor to really figure out if the company is clear on what they need the money for. So checking in that they have a plan around how they'll spend that money. And then potentially also checking in if they have a crowd, asking them who they think would invest. And probably from an accounting lens, you'll also want to talk through the idea of valuations and how much of the company that should be on offer. So typically we wouldn't recommend selling more than 20% of your company in the first round. So that, yeah, it determines how much they can raise in the valuation as well. So those sorts of things I think would be really important for an accountant to talk to. So how much you have a crowd and how much of the company are you willing to issue in this round?
Do you find that SMEs are accepting this concept that to raise money, they need to be allocating shares in their company to outsiders?
Yeah, it's an interesting one because often there's a lot of fear in that from the
Mm.
founders that they'll lose control. And so it really is a conversation then around, you can still pass ordinary resolutions and special resolutions if you own more than 75% of the company. But often they don't know that. So it is being clear on what it means to raise money from a large group of investors. Typically they aren't investing a lot of money, so they're not as engaged potentially as a very big investor would be. But yeah, that they could still pass most resolutions.
Yeah. Okay. And what is your expectation of what's going to happen later in this year? Obviously, you're currently in New Zealand, and but New Zealand seems to have got through this problem on COVID-19 a little bit better than what we in Australia have done. And we've got this latest problem that's re-emerged in Victoria. So what is your expectation of what's going to happen in the market for crowdsourced funding inquiries later this year?
Yeah, so we expect to see a surge in interest in raising money in this way. We're seeing a lot of interest right now, as it becomes potentially harder to raise money in different ways, and as potentially companies need the money more. Um, at the same time, we are seeing that individuals are feeling a little bit more scared about investing in companies. So the average that's being pledged is a little bit lower these days. But yeah, we do believe that this is going to be a really important part of the rebuild. As it becomes harder to access funding in different ways, people will be going to their communities to raise investment.
Okay, so obviously, if anyone wants to talk to you, either an accountant or a business operator that's been watching here today, they can contact you via your Brisbane office, can they?
Yeah, so just anna@pledgeme.com.au. We've got a team still based in Brisbane. Unfortunately, I am not. I got stuck on the wrong side or the right side, depending on how you look at it. But yeah, always happy to have a conversation with advisors or with companies as well.
So that email address is anna@pledgeme.com.au.
Yeah, that's correct.
Okay. Well, thank you very much, and thank you for taking time out of your holidays to be with us today. And we joked before we went on air that you might have a Sauvignon Blanc later on. I'm sure you will. It's Friday afternoon, and you're 2 hours in front of us.
Oh,
So thank you for joining us. If are you going to remain online, or you're going now?
I might leave you to it if that's okay.
Okay. Yeah, that's fine. And if we get questions, we'll pass them on to you.
Let me know. Perfect. Awesome.
Thank you very much. Okay. Bye-bye. Okay, so thank you very much to Anna Gunther for that overview on crowdsourced funding. Those of you who have been watching this series of webinars regularly will recall that we've now had 3 other crowdsourced funding intermediaries. So from an accountant's, bookkeeper's, business advisor's point of view, hopefully you've got a far better appreciation of how crowdsourced funding equity raising operates, and hopefully you're able to answer any questions that your clients or prospects may have for you. So I'm now going to move on with the rest of our presentation today, and we will now look at the early stage innovation company capital raising beneficial for young businesses. Anna didn't mention this, but her organisation will assist in helping companies to find investors in early stage innovation companies. So let's go back to the beginning and get an understanding of what this is all about, because I suspect that many people around Australia, many accountants, don't really understand what this status of an early stage innovation company is all about. So it is a company, a proprietary limited company, can be an unlisted public company if you wish. The company, though, has to be aged under 3 years, although in some cases it can be aged up to 6 years of age. So primarily it's targeted at young businesses that have developed a new product, process, or service, marketing or management methodology. And that's a fairly wide group of activities, but it's not for someone that's not developed anything. You need to have developed things, and that's going to be a bit clearer when we go through the eligibility tests. And there's some real benefits as to why young companies should look seriously at this status, because you have to achieve the status. The income has to be under $200,000 for the last 12 months. That does not include grant funds that you've received from an accelerating commercialization grant. That's the only grant that the income is not included in the $200,000 limit. And expenditure in the previous 12 months has to be under $1 million. So income under $200,000, expenditure under $1 million. And then there's two tests, and a company only has to qualify under one of the tests. So let's look at the tests to see if you achieve this classification. The first test is called the Gateway Test. And to qualify for this test, the company must earn 100 points or more. It can earn as many as it likes once it's achieved 100. So where do they earn points? The first item is research and development. And this is where this nexus is with having done something, developed a new product, process, or service. If the research and development component that's able to be claimed in the company's tax return as research and development incentive components exceeds 50% of the company's expenditure, so this expenditure of up to $1 million, if the expenditure for the year was $400,000 and $210,000 is research and development expenditure that's been claimed in the company's income tax return and accepted by the ATO, then the company earns 75 points. They've only got to earn 100, they've got 75 already. If the research and development was somewhere between 15% and 50% of the company's total expenditure for the 12-month period, the company would earn 50 points. If the company's been admitted to the Accelerating Commercialization Grant Program run by Oz Industry on behalf of the federal government, the company earns 75 points. So if they've done research and development of more than 15% of their expenditure and been admitted to the Accelerating Commercialization Grant Program, they will have at least 125 points and potentially 150 points, and therefore they have qualified under the definition of an early stage innovation company. And we'll come back to what happens next in a moment. We'll just go through the rest of the point scoring opportunities. If the company's been admitted into an approved accelerator program, and these are offered in various parts of Australia, mainly in the capital cities, the company would earn 50 points. If the company has been able to attract arm's length investors to contribute $50,000 or more into the company earns 50 points. If the company already owns a patent or a plant breeder's right that's registered somewhere in the world, they earn 50 points. If the company owns an innovation patent or a registered design, the company earns 25 points. So if the company's earned 100 points or more, it has self-assessed as an early stage innovation company. You don't have to apply to the tax office. You have self-assessed. A document trail should be prepared that supports the calculation of the points. By that I mean that you as the accountant have assembled the various documentation to support that the 100 points have been earned. Within the ESS BIZTOOLS system, we have a full series of forms and documents and statements to be signed by the directors that will allow you to fully substantiate that the company has qualified at a particular date as an early stage innovation company. There is no need to submit this information to the tax office unless you need a ruling on something, because this is basically black and white. These things have either been achieved and can be supported by independent documents, or they can't. And if they can't, well, you can't utilize that particular item in the point scoring exercise. Let's now look at the principles test. If the company doesn't qualify under the gateway test, that's all right. Everything's not lost. And in fact, the expectation is that very new companies will probably not pass the gateway test because they won't have been around long enough to have got underway to get those items. So they can then move into the principles test. There's 5 questions in the principles test, and the answers have to be more than one-liners or yes and no answers. Is the company genuinely focused? So this is question number 1, on developing for commercialization, one or more new or significantly improved. Please note those words: significantly improved products, processes, services, or marketing or organizational methods. Again, this is a very wide canvas that people can be involved in. The taxation office expect answers of more than one line to these questions, around at least one A4 page of information as to what the company is doing to be able to substantiate that it is genuinely focused on developing for commercialization. So the company may need an independent report from a marketing consultant to be submitted. Does the business have high growth potential? If there's only a reasonable chance of selling 5 of these widgets that have been made at $1,000 each, it's not going to be a business with a high growth potential. But that high growth potential needs to be qualified, needs to be sussed out so that it can be seen. Can the business be successfully scaled? What the government's hoping for is for you to be able to attract investors into this, or your client be able to attract investors into this company. You're going to be able to say, well, currently our turnover is under $200,000, of course, but we think in the next couple of years we can scale this up to $4 million, $6 million, $10 million per annum. They want to see some genuine information on how the business might be scaled up. Does the business have potential to be able to address a broader than local market? So if it's a business that is only going to be suitable for the North Queensland area, or the Illawarra area in New South Wales, or the Margaret River area in Western Australia, it's probably not going to qualify as being a business that's going to address broader than a local market. So hopefully you're able to articulate what that might be. And number 5, does the business have competitive advantages? Now you might say, as I've said a few times, these questions are fairly similar. They are, but they are looking for serious responses to them of around that A4 page so that the adjudicators can look at it. Now these questions, I've already said that, it's more than a one-line response. Within the ESS BIZTOOLS product package for early stage innovation companies, we've got full documentation which will assist you as the accountant to undertake this due diligence review and to then prepare the documentation as we see fit for the directors to sign off on the answers to these various questions. So you can show that they have qualified under the principles test. Now, the completed due diligence report needs to be signed, and then this has to be submitted to the taxation office for them to issue a ruling. The company can take a risk, or put it another way, the investors can take a risk, but I don't recommend that. I have had one client, though, went away and submitted the reports that I'd prepared, and investors contributed money without getting a tax office report ruling. I think it's important though to get that ruling first. And what the ruling is going to say is the company has qualified at a certain time for a certain period as an early stage innovation company under the principles test. And then let's look at the benefit for investors. So these due diligence documents are going to be prepared so that they can be submitted by the client to potential investors. And you may play a role in that as well. Or you could go and talk to Anna Gunther and pledge me, and they will find the investors. So they don't have to be people who are known to your client. They can be anywhere, and the crowdsource funding intermediaries are all active in this space of helping people who want to raise capital as an early stage innovation company to be able to do so. So the benefits for the investors, they get a 20% tax offset based on their investment. Now the maximum for a sophisticated investor, the maximum tax offset is $200,000. Obviously that's geared to $1 million investment. They can invest more than $1 million in the company, but they'll only receive the offset up to $200,000. And the investment must be investment within the time frame that the documentation, the due diligence review relates to. If they're a retail investment, the offset is $10,000 maximum, because the maximum investment that a retail investor can make to a company is $50,000. Now, the other big benefit for investors is that they avoid capital gains tax if they own the shares for longer than 12 months and less than 10 years. There's no capital gains tax when the shares are sold. If they still own the shares after 10 years, the company can be revalued and a new cost price determined for that investor. And that will be the cost basis that's obviously used in the future capital gains tax calculation. So what's all this mean for you as an accountant? The development chain will probably have commenced with research and development activities. As you can see by the way the tests are framed, there's a big emphasis on research and development. It won't have occurred in every case, but in many it will have. So perhaps you had an involvement with this client back when they were doing research and development. Or if you didn't, hopefully by watching this video, you're going to get a concept of the chain, the journey, and perhaps you can be alert for some of your clients who may be undertaking the research and development activity now, because they need to be a company, as you know, to claim the research and development incentive. So if someone's doing research and development of any sort of magnitude, over $20,000 worth of expenditure per annum, they need to be in a company structure. Because of the benefits that an investor can receive, and these were quite deliberate, of course, from the government's point of view, trying to encourage investors to look seriously at young startup businesses that have undertaken research and development and then developed a new product, process or service in Australia, to invest in them. That's why this legislation was put in place. So these investors can be very interested. Some of these potential investors may also be your firm's clients. So having a working understanding of how early stage innovation companies works may help you to be able to suggest some potential investments to your clients. Now, companies will require, they're not going to be able to attract these investors unless they've done some things. They're going to need a business plan, and with that, a marketing plan. They're going to need budgets and cash flow forecasts so that the company can be valued, so that some expectation of what this investment might be all about can be conveyed to the potential investors. And as well as there's the due diligence documentation that I've already referred to. This will be the gateway test, which is a self-assessment process, or the principles test, where the documentation has been submitted to the Australian Taxation Office for a ruling. This whole process from the research and development phase, claiming the research and development incentive, preparation of business plans, budgets and cash flow forecasts, due diligence for determination whether the company qualifies as an early stage innovation company under one of the tests, is interesting and challenging work for your team in your accounting firm. Very interesting work. There's a bit more to it than taxation. So that's the key item that I wanted to convey to you today about the early stage innovation company. If you want more information, please contact us, peter@essbiztools.com.au, and we'll give you a detailed overview of the early stage innovation company product package that we have developed to assist you to be able to offer these services to your clients. I'm only drinking water. Anna's gone off now to, because they're 2 hours in front of us, to have an afternoon refreshment with Sauvignon Blanc in Marlborough. I'm a bit jealous. The survival panel update, let's go through it. The Prime Minister and the Treasurer announced yesterday that eligibility for JobKeeper payments from October 2020 onwards, this is the new JobKeeper payments, which originally was going to be based on 6 months reduction in turnover of 30% for a business, 15% for a not-for-profit, has now been changed to only 3 months. So it's the September quarter that's going to determine the eligibility for a business to continue or to join JobKeeper. This change has been made because of the deteriorating situation in Victoria and is being offered to businesses all around Australia. And incidentally, we are thinking of the problems that accountants and business people are having in Victoria, and we hope that you're going to be able to get on top of this immense problem over the next 6 weeks. The other item I wanted to mention is a reminder that the apprenticeship subsidy scheme has been extended to 31 March 2021, and that if you haven't already assisted your clients to apply for that scheme, if they have apprentices, perhaps you should be doing so. And also a update on banks and loans. As we all know, many businesses have been given a repayment holiday and loans from banks. The Banks Industry Association has made an announcement that banks will consider extending that repayment holiday for 4 months to the end of January 2021. But the business needs to apply. It's not going to be automatically granted. And to go and talk to the banks, I suspect that you will need to be able to produce for your client a business plan, budget, and a cash flow forecast that will give the banks a clear idea of where this business is headed in that period. So what should you be doing as an action plan within your firm? You've heard an overview today about crowdsource funding from Anna, and I've given you an overview on early stage innovation company capital raising. And you could have quite a number of your clients who, in this period where they're working from home or not able to go to as many sporting events or gyms, especially if they're in Victoria, they may have been working on some new products, processes, or services. So they may be very interested in these opportunities. But a more important action plan item, I think, is the one I've got on the screen. So I've given you time now to read it. The Commonwealth Bank undertake an annual survey of the accounting industry, and they call the report Market Pulse Report. You can find it by going onto the internet and putting Commonwealth Bank Market Pulse Report, and you will find that a report that was issued in late June 2020 has highlighted that the practice area expected to be in most demand in the next 6 to 12 months is business advisory services. It got a rating of over 70%. The next closest was on restructuring of businesses and insolvency, which was 60%. Taxation consulting was 48%. So it gives you an idea of the magnitude of the endorsement of business advisory services by the accountancy firms, both small, medium-sized, and large accounting firms situated all around Australia had given. And they identified that business advisory services was the practice area expected to be in most demand in the next 6 to 12 months. What's your firm's action plan? Are you endorsing business advisory services? Or are you going to sit back and watch the industry implement business advisory services and you don't? That's a legitimate decision if you've thought it through, but I would be counseling you to think very seriously about what you are going to do. And we're now into the first week of August. It ends today. So we've already gone 5 weeks in this new financial year. What is your strategy for this year? So I've identified here what we at ESS BizTools are identifying as the key business advisory services products that we've produced that our subscribers can utilize for 2020-21. Survival in difficult times is our headline product. It's very appropriate given the circumstances in Victoria and other parts of Australia. It's all part of the business recovery exercise. And unfortunately, the Small Business Association and some government ministers are acknowledging that thousands of businesses will probably not reopen from these problems. I'm sure as an accountant, you want to do your utmost to ensure that none of those statistics apply to your clients. One way we think you can help them is by utilizing the survival in difficult times approach, whereby there is a detailed analysis undertaken of every aspect of a business. The second area is performing the role of a chief financial officer for your client. And that means that you have an input into a whole range of activities beyond annual accounts and taxation returns. I was the chief financial officer for a listed public company, and the annual accounts and tax returns were very low items on my priority list. The key areas were this week's results. We had operations all over the eastern states of Australia. How did each of the 500 plus activities that we conducted, how did they perform? What was their result this week? Working capital questions, stock and debtors. What's our position all around Australia? And probably the most interesting area was what I call the what if questions, asked to me by the CEO at all hours of the day and night and early morning, and other members of the senior leadership team. What if we did this? Can we change this? What's the costing of this going to be? So this really highlighted costing exercises. Now, when I talk to a lot of accountants in public practice, I find that many of you don't really get involved in this work, but your clients have got the same problems as what a CEO of a listed public company's got. But normally that listed CEO for a public company has got 8, 9, 10, a dozen direct reports who are experts in all sorts of things, whether it's accounting, finance, sales, marketing, the products that that business produces, social media, intellectual property, IT, that he or she can go to get input. Who does your client go to? Your small business or medium-sized enterprise client. One of the key roles that we believe that you can play to implement business advisory services is performing that Chief Financial Officer services, which would include company secretary role, to be a key coordinator, a key contributor. Business funding for SMEs. Virtually every financial writer in Australia in the Financial Review and other publications has been forecasting for months that SMEs are going to have real problems in trying to borrow money from banks once we get beyond the 30th of September into October. Why? Because banks have lent a lot of money in the last 5 or 6 months to SMEs. Banks have had to put up with the government making a temporary amendment to the Corporations Code, which has meant that directors can't be sued for insolvent trading. And has also meant that there's no recovery action for default loans at present. But that's all going to change in October. And I suspect, and Anna's confirmed it in this presentation today, that many businesses are going to be looking around to see where they can get funding for their new idea to expand their business or even to keep their current business going. One option to look at is whether you can raise money from the public by issuing shares in the company in exchange for investment money. Please have a good look at it. It's not for every client, because they're allocating a percentage of their company and some people don't like that idea. But why not subscribe to our product package and then have a good look at it so you can have an informed conversation with your client. And we've got quite a number of videos now, probably 20 videos on all sorts of aspects of crowdsourced funding that's available on our website. And the fourth product package that I think is very important for you is a review of the charge out rates for tradies and manufacturers, or the retail pricing and the product mixes that occur in retail shops. Because I'm afraid that we all prepare budgets and slot in a sales figure and say $3.6 million is going to be the income, and there may have been some calculations as to how that was determined, and we're going to earn a profit of $450,000. But does anyone ever go back to then check what's actually happening in the production area if it's a manufacturing business? And this gets back to the productivity being actually achieved by individual team members or their classification. So if the budget was done expecting a 74% productivity and only 60%'s been achieved for various reasons, that's going to change the profit potential for that business unless there's been some other changes. What's the markup that's been built onto materials being bought in for supply to a customer? If the markup percentage is being calculated at 12.5%, but because of competitive pressures only 8%'s been achieved, that's going to change the forecast profit for the year. And it's too late to do anything about the profit that's been achieved in July 2021. We need to know that information now, at least month by month, so that if there's fine tuning required, or at least the leadership team can consider the fine tuning that's required. The same sort of thing can happen in retail shops. There's obviously been some consideration given to the product mixes. Some things are marked up 60%, other things 100%, other things 250%. If all your client is starting to do is to sell the 60% markups, they're going to have to be making a lot of sales to achieve their profit forecast. And that's probably totally unrealistic. So that type of exercise can bring you right into the internal management of your client's business. And this is the sort of work that you would be doing if you were engaged on a full-time basis with your client as the internal accountant. So what the key concept of business advisory services is that you can get involved with your clients to be undertaking more and more of this sort of work to help them survive and add value to their businesses. And whilst I've been talking about business advisory services for what seems a long time, I think the next 12 months is going to be the most important phase of business advisory services ever in Australia, because accountants need to supply this service to assist thousands of small businesses and medium-sized enterprises survive. And it won't just be in Australia, because this coronavirus has gone around the world. It's a worldwide problem. So would you like a free, no obligation trial so you can see what we're talking about? You're invited to participate in a free trial of ESS BizTools. No questions asked if you don't want to do anything after 30 days. Just go to our website, www.essbiztools.com.au, and click on Access Levels and then select Guest Trial Access. We will contact you during the 30-day period to see how you're going, to see if you've got any questions, but that will give you an opportunity to trial the material. And if you would like us to present a free, no obligation webinar to you and your colleagues in your accountancy firm, we'll do that for you. Your investment is 60 minutes. In 60 minutes, I will give you an overview and talk the talk to convince you that offering business advisory services is in your best interest. Invite your colleagues. So if you'd like to take us up on that, please send me an email, peter@essbiztools.com.au, and tell us your preferred date and time for a webinar. Now, I can't do it next week because I'm already booked up, but the week after we can allocate some time to you. So I'm looking forward to hearing from you. Our next webinar is on next week, Friday the 14th of August at 12 noon. And if you want to view some past webinars, you can do so by going to our website. Our presenters on the 14th of August are Amanda Gascoigne. Amanda's an experienced chartered accountant who for the last 5 years has been a practice management consultant to small accounting firms and solo practitioners all over Australia and New Zealand. And she's going to be talking about her experiences and trying to help you as practitioners through these difficult times so that you can help your clients. And Andrew Geddes, who really doesn't need any introduction. Andrew's the leading consultant to the accounting industry in Australia, one of the founders of FMRC many years ago, Financial Management Research Centre, advisor to hundreds of accounting firms and other professional firms around Australia, and for 9 years was the chair of Green Cross Limited, a veterinary surgery business that started in Townsville as a one-person business and grew to be an ASX 200 company. So Amanda and Andrew are your presenters next Friday. To register, please go to our website, www.essbiztools.com.au/webinars. And for more information, please go to our websites. Or contact us, or if you wish, make a phone call, 1-800-232-088. So stay safe. Thank you for participation in viewing this webinar today. If you've got any questions, please contact us and we will get back to you. If you need any assistance in these difficult times, particularly if you are based in Victoria and you're in lockdown and you're wanting to service your clients, contact us. If you want us to put something out as a general promotional material, we'll look at doing that, because we all want to help, first of all, accountancy firms all around Australia, and obviously the small businesses and medium-sized enterprise community. So thank you for being with us. Have a great day. Goodbye.